hours every week, and you still don't know. EA drops and the market moves fast. You read it last week's data, how long does that last? Crude and nat gas telling you a story. Visibility, velocity, that's the glory. One signal every morning before your coffee's cold. Green means go, red means hold. This is rogue radar, a signal every day. Oil and natural gas cleared out of your way. 5 minutes of clarity, that's all you need. Get the rogue method free, then let rogue radar read the market. EnergyRogue.com.
I love
Oh,
that
folks.
raccoon. I love that.
Oh, that raccoon is cool. I think, well, okay. He's cool as a cartoon. Having some experience in dealing with real raccoons, not so much.
Yes. So, welcome in, everybody. Welcome in. You gonna welcome us in, Bill?
You bet. Hey, listen, folks, we're here for the weekly update. Brian and I, we doing this. It's some sort of mental disease that we love the energy business so much that we get in here and we like to see everything that's going on and trying to figure it out and trying to go, oh my gosh, why did they do that? How's this going to happen? What this? And and it goes back early in my career when someone says, hey, listen, the reason natural gas prices are going up is because the salmon are spawning. And I go, excuse me? And because the salmon are spawning. I go, okay, you're going to have to connect more dots than that. And it actually was true, Brian, because it was going up in the Pacific Northwest. When the salmon are spawning, they can't run the dams, therefore they can't run the hydroelectricity, therefore they have to burn more gas to get the electricity that they need.
Isn't that crazy? It's almost like your theory on Sonic stock, but we'll save that one for a different day.
I like my burnt toast stock better, my burnt toast theory better.
I think that theory holds water. So listen, welcome in, folks. If this is your first time here, thanks so much for joining. We're going to talk about the three variables that most people are missing when we're talking about a U.S.-Iran deal. So when a deal was struck, which over the weekend was put in doubt with a little bit of trading attacks and trading strikes, but there's three variables that really break down what the future looks like. Okay, so this is going to pretend, we're going to pretend that the Strait of Hormuz is open, peace is fully agreed to. Those two things have not happened. We are still closed on Strait of Hormuz. I think at max 30 ships were transiting the strait, and that is compared to prior to the crisis, 120 to 150 ships. So just a fraction was passing through. I think as of today, we're recording this on Monday, as of today, only 5 ships in the last 24 hours. So it is very tenuous. But for this example, what we're doing is we're looking ahead and we're trying to think about, well, what does the world look like once the Strait of Hormuz is open and peace has been agreed to? So couple things. We want to root this. We're going to use a couple of our charts that come from Energy Rogue, our Rogue Edge product, that allow you access to 150 interactive downloadable charts on supply, demand, imports, exports, storage, stocks, on everything that is crude related, natural gas liquids, and refined products. There's more information down below. But this comes from our Rogue Edge product. And what you can see here is a distinct OPEC, and this includes OPEC, OPEC plus. It also includes UAE, which is still counted within OPEC, but it's not in OPEC anymore. Essentially, we went from 32 down to 20. Now, this includes some of these. This is about 12 million barrels a day delta prior to February 28th. Now, that includes some of the liquid side, so we're going to ignore that
Right.
because we have some other numbers, but this gives you kind of a quantitative look at it. This is what it looks like with all the individual countries. OPEC liquids, you'll see the top layer is a big significant portion of it, but this is how the OPEC countries look. And prior to the event, it was about 22 million, and we went down to about 12. So this includes Saudi Arabia, Iraq, Qatar, Iran, Kuwait, and we're counting UAE because that's still a fresh exit from OPEC. But inside
But
of
it's also UAE is actually in the strait, and that last graph was of the countries in the strait. And you also have to realize that we look at OPEC as one, but literally these members of OPEC are on different sides of this conflict.
right, yeah,
And so that's going to affect that as well. So yeah, it's not as simple as put it all on the chart, because that's why Brian always brings this commentary, because if you just read charts, you could come up with a completely different conclusion.
uh-huh. Well, and that's why we take a look at the data layer, we take a look at the chart layer, and we try and triangulate, okay, here's where we've been, here's where we are, and here's where we're going. So this is what we take a look at as far as Saudi Arabia this past month. In May, it was producing 6.91. Prior to this was producing about 10. Iran was about 2.3. And prior to the crisis, they were maybe close to 3, so they're not down that much. UAE down to 2.11. They were pushing 4 prior
But
to
let's
this.
look at Iran, because Iran, that's their production, not what they were shipping. They were
That's
only
true.
shipping out about 1.2.
That's true.
So
Um, that is true. So we got, where is Kuwait? There's Kuwait. Okay, so Kuwait was about 2.5. So here's all the prior to the event and what they were shipping out. So you have Iraq, that was about 3 million barrels impacted, Saudi Arabia about 3, Iran 0.75, UAE about 1.7, and Kuwait about 2. So they're about 2 million barrels. But that's the country by country breakdown. But let's get back to this. That's in our Rogue Radar product, which is only $89. If you want to stay on top of this and actually understand what's happening from a technical and fundamental side, you get a summary every day. You get 2 PDF deep dives every single week, 2 videos that we break down what's happening in the energy market, one on Monday to kind of set up the week, one on Thursday after we've digested all the latest stats and statistics, and then we map what is likely to happen in the future. We covered that for oil, natural gas, refined products, natural gas liquids, and electricity. So in a nutshell, we're down about 9 million barrels a day of shut-in production. Okay, that's important. We'll remember that number because we're going to come back to that. But the consensus trade, peace equals crash. And what happened is the price went from, I'd say, $85, $87 down to 70. So prior to prospects for peace, we were between 85 and 90, and we've collapsed down to 70 on WTI, about 73 on Brent. But why did that happen? Deal was signed. Strait of Hormuz reopens. It's not open, but it reopens. That's that's what the headline says, is that it's reopened. It's not reopened.
so what you're saying, Brian, is
And furthermore, you're making a big mistake.
that is true. That is definitely true. But this is what the financial market, there's a different market. There's a financial market and a physical market. Everything
Right.
we observe on price is on the financial market. We take a look at the physical market and what's actually happening. So as WTI and Brent are trading 70 and 73 respectively, the physical market is trading somewhere between 90 and probably 120, depending on where you are in the world. So there's a disconnect between the physical and financial world right now. But the financial market is pricing in that supply floods back, the strait opens, and that it's a price collapse because now we're going to have problems. So this is the reality on the supply side. Let's take a look at the supply side. Tell me what I'm looking at here, Bill.
So basically, what we're trying to do is figure out how fast these 9 million barrels can come back into the market. All right. There's a lot of factors around that. First of all, there's the actual production factor, which is how can they get these wells back on? Did they literally shut in wells? Did they put them in storage? All of that is part of that.
Mm-hmm.
And so it's not a switch. You can't just turn a valve and the oil flows.
It's not
If
like
it's in
your water
storage,
faucet, right?
well, really, even your water faucet, let the electricity go down to the pump, and you'll figure out how quick that faucet doesn't turn.
Right.
So if the barrels are in storage, that's why it was easy to flow. That is why we've been covering this lack of oil coming out of the strait with storage from other parts of the world.
Mm-hmm.
And now we're seeing that storage come way down. We're going to talk about that in a second. So Brian, I think, and I think he's right on this, is that in about 90 days, we can get 6 of that 9 back. But there's
Approximately.
3.
It could be less, it
Yeah.
could be more, guesstimate, right?
I got to say, it could happen. It doesn't necessarily mean that everybody will get their act together and that can happen. And the other thing is that if prices go down, everybody's going to be gun shy about working on it too fast.
Right. Well, and the other thing to consider is that assumes the strait is fully open today and 90 days
Right.
from now. We're currently in a 60-day process. I think we're 10 to 15 days into the 60-day process to negotiate the peace. So we could be talking late in the year before
Right.
normalcy actually hits this region.
And we haven't even talked about what the ability to get that 6 million moving is going to take.
Well, and we're
The
going to
3
talk
million
about
still
that.
moving is that there's some barrels that may not come back at all.
Yep. I've estimated maybe 1 million is not going to come back. And I've heard that number used before, that 1 million of the 3 is just not coming back. So
Well, I know there's going to be 1 million of the 3 that's not going to come back from the same place. We could see some additional drilling somewhere else that would bring that 1 million back, but it's not going to be the same barrels.
It's not going to be a return of the same. So the key point here is 9 million barrels of production is shut in today. 6 million comes back. 3 million is still missing. So you can take us back to February on our supply demand balance. Let's remember that 3 million, because that's going to be key. So that means supply side is down 3 million from where we were prior to this. Okay, so remember that number. Variable number 1 is the production doesn't restart overnight. This is what Bill was talking about. In the best case scenario, we're talking about 6 million barrels a day comes back. But this has well restarts, pipeline integrity rechecks, tanker coordination. None of this is instant. Okay, you're still going to be damage repair, because reservoirs don't respond the same way that your water tap does at your faucet. You don't turn it on and turn it off and turn it on and it comes back at the same rate. The oil production does not float the same way, and it actually takes time.
And to protect the reservoir, they're not going to bring it on all at once.
Right.
They're going to bring them on in stages.
Yep. Now, I would say this region is probably one of the best to operate and turn things off and back on by relative terms versus the shale in the United States, because those reservoirs don't respond quite the same way as these reservoirs, but you're still going to have a long timeline. You're going to have at least 90 days. So it doesn't start overnight. There's a lot of things that need to happen, and it's not just opening a valve. Now, number two, demand destruction doesn't fully reverse. Destroyed demand. I've heard a number of 5 million barrels a day. Bill, have you heard other numbers? I'm using 5 as a variable.
I think 5. I think we'll be plus or minus 500,000 barrels there.
Okay.
Because I've heard lower and I've heard higher.
Okay. Yeah, and I have too, and that's why I picked kind of a middle ground. So 5 million barrels a day is wiped out. Now, why? Why does demand destruction happen? Well, when prices rise, some people don't drive as much. Some people don't order as much. Things escalate in price, so people aren't willing to pay it. People take less plane trips. Also, there's been restrictions on crude demand, on crude related products, whether it's diesel, gasoline in India, in Asia, in Europe. There's been not restrictions, but then curbings of how much is being utilized. So when peace occurs, assuming it happened today, some of that demand returns because prices will theoretically drop and demand comes back in. Those restrictions are lifted in Australia, Asia, Europe, to where those restrictions aren't there, so there's more consumption. So if 2 million barrels a day comes back, that leaves us about 3 million barrels a day of demand that stays destroyed, meaning we're down 3 on the supply side, down 3 on the demand side. So what that means is we're back to normal, right? Not quite. This is a variable that Bill first mentioned a few weeks back that is a sleeping giant. There's going to be an SPR, and for people listening that don't know what that is, it's a strategic petroleum reserve. And that is what the United States uses as oil stockpiles to use for national interests. And sometimes that's used to curb prices during price shocks, create supply when we need it. But it's not only in the United States, it's in Europe, it's in Asia. All three have drained a tremendous amount of strategic petroleum reserves. And so when the strait reopens, and every single one of them starts refilling aggressively. I mean, let's just take a look at, let's go ahead and take a look, this Rogue Edge for those interested that really need to understand the oil and gas markets. Rogue Edge is going to be your cheapest source. And there is a link down below, but let's take a look at the strategic petroleum reserve, which is right here. Let me take off these layers, and this is the power of Rogue Edge. So now let me take this back. We are going back to when they first started counting the crude, and the white line is where we're at. So we started between about 575 million barrels in storage. This is the lowest we've ever had it. And versus in reported history, I've heard this number quoted in the 80s that as we were building out this strategic petroleum reserve. But you can see we took off a lot in the COVID recovery, and we started adding back in, got over 400, and then US and Iran. So this is one of the lowest points that we've had. Now, given that we've had to draw this down so much, what do you think Bill, what do you think the motivation is to actually add barrels back into this in case this happens again?
The motivation is law. They're required by law to refill it.
Well, not just the United States, but Europe, Asia, those aren't laws, but you can think about the motivation. I don't want this happening again. I want to have as much protection as I can.
China's notorious by filling strategic petroleum reserve when the price is low. So if we see the WTI and Brent come down, we might see China doing that. But as we've noticed, some of these physical deliveries are trading above the
Yep.
financial market.
Yeah.
And that's your first indication that things are not aligned.
Physical and financial. And just for those listening, currently as we're recording this, you've got WTI at 70, Brent at 73. From what we've heard out in the marketplace, physical barrels in ships are trading anywhere from 90 to 120. So probably more at this 90 level, but it gets into a question of where. But you can see we have a very big difference between the financial market over here and the physical market over here. So when we're looking at that, that is what we always evaluate. And these will converge at some point in time. So, but that's a key variable. So let's take a look at this. Refill demand is going to be real and it's going to be sustained. Our estimates are 2 to 4 million barrels a day of new demand to refill this SPR.
Right.
And we estimate, what do you think? 2 years?
I don't know. We did a quick calculation, and I think I came up with 700 days, pretty close to the 700 days. So maybe just a tad bit over 2 years.
Okay. Okay, so a tad over 2 years. And realistically, and this is something that impacts today.
And you realize the tad is a little bit bigger than a smidgen.
I did not know that.
Okay. Well, just there's a smidge, then there's a tad, and then you get into just a little bit more. I mean, so you can see that we use very precise measurements here on Energy Road.
Right. A smidge, just a smidge higher. So let's take a look at it. So let's run the full math. We have 2 million barrels a day of demand recovery and 2 to 4 million barrels a day of SPR
And
requirement.
Brian, I'll stop right there because I think that that demand recovery, I think it's going to be higher.
So we saw that after COVID.
Yeah.
We saw that after COVID. We saw a snapback on the demand side in a big
So this
way.
is where sometimes, folks, Brian, I don't always agree. I think his 2 million, I'm putting it at 4 million.
Which means
I still think we still lose $1 million that's gone forever.
Right.
Or at least for a long time.
Yep. So on the demand side, we're going to see 2 million barrels a day of demand recovery and 2 to 4 million. So that's 4 to 6 of new demand versus today. And then on the supply side, we have 6 million barrels a day return and 3 million barrels a day still missing. So the net supply gain is going to be actually 3 million barrels a day versus where we were. So what that means is demand is going to outweigh supply by 1 to 3 million barrels a day. Now, bear in mind, 1 million barrels a day of imbalance on the supply side or on the demand side would move oil markets $10 to $20 before this crisis.
Right.
So if we're talking 1 to 3 billion barrels a day, this paints a very different scenario than what the financial market is telling us today. The market is pricing a glut, and the balance sheet shows a structural shortfall, and that the peace deal is not really going to change anything, and that we're setting up for higher for longer if the physical rules the price. And what we've learned over our career is the financial market always comes to the physical reality, but the timing of how quick or how slow that is variable. We've seen it dislocated for 6 months, a year and a half, and it can stay dislocated for a little while. I would say it's been dislocated for the duration of this crisis, because the financial market never really priced in what physical barrels have been trading for.
Right.
So, okay. So the Hormuz premium, it doesn't disappear at the signing. 25% of the world's seaborne oil is still not flowing. So the market isn't pricing the refill. It's pricing there's a gap, and supply short. After this crisis, whenever this is done, we're still short. And so there's going to be a lot of demand pressure on how much of the demand destruction is recovered. That's really the key question. I think the supply will return pretty quickly, with the exception of 3 million barrels a day. So that's my story, and I'm sticking to it. And if you or you yourself or your company need to understand what's happening in oil markets, natural gas liquid markets, that includes propane, ethane, butane, natural gasoline, refined products such as diesel, distillates, jet fuel, gasoline, RBOB, go to energyrogue.com. We have two options for you. We have Rogue Radar at $89 a month and Rogue Edge at $179. So,
and why do they need to subscribe to Energy Rogue, Brian?
well,
you know why?
Why?
Because
no matter how many times you save the world, it always manages to get back in jeopardy again.
I mean, come on. That's how it sits. So anyway, I know we threw a lot at you. Drop us a comment, ask a question. We will get back to you. Sometimes we're a little slow. I was overseas recently, so I'm a little slow on getting back on YouTube comments. So if you provided YouTube comments, let me know. On LinkedIn, you can always feel free on LinkedIn to DM me. Is DM me, DM Bill. It's Brian Pieri, Bill Shanahan, and we are with Energy Rogue, and we're well out there. So just DM us if you have a question, because there's some people that really need to watch their business, such as producers and consumers. And the producers and consumers always are facing price risk, whether it be on the natural gas side or crude oil side. And we try and take a deeper look at the market so that we look at where we've been, where we are, and where we're going. So those are
for those of you not in our
things.
industry. When Brian says producer, he's talking about an oil and gas producer, not somebody who's a high producer. But oil and gas producers and consumers already have a bias in the industry and a bias in the market.
Yep.
And so you need to know what the other side's doing so that you're able to be able to properly guard against that risk that you have in the market already.
You can think about it simply is if you're a seller of something, understanding the supply-demand balance is important. If you're a buyer of something, understanding the supply and demand balance is important for different reasons, because they have cost planning on the consumption side and revenue planning on the producing side. So those are valuable. And then we actually have a lot of traders that come to us because they realize the physical and financial don't always reconcile, and that the financial will gravitate to the physical side. So that's another reason to stay educated on this side. So,
and if you guys want an easy analogy to understand what's going on in the Middle East right now, I'll put it to you this way. If you have little kids, I know when my kids were little, they could make a mess faster than we could clean it up.
Yeah.
And so this mess is going to take longer to clean up than it took to make.
I totally agree. And that is a great analogy. And I think that proves the point right now. So listen, folks, thanks so much for tuning in. We will see you next week, and drop us a comment if you want to hear about a particular topic, because we cover it all. We cover everything from diesel. We've talked about AI data centers. We've talked about just virtually anything, and we try and think about what's important and what's not being discussed today. A lot of people are talking about the peace deal and thinking it's ending, like this chapter is ended. It hasn't ended, and whenever it ends, story's not done. This is going to be with us for multiple years. So any parting words of wisdom, Bill?
Always
be excellent to each other.
Love that movie. So listen, thanks so much, folks. And tell you what, thanks for dropping in. Thanks for listening the whole time if you're listening to us right now. And we will see you. When are we going to see him again?
We're going to see him again next week. And you know something, Brian?
What's
I
that?
think it's about time for lunch. How about you?
About time for, yeah, it is about time for lunch.
You know?
We still got that meat lovers pizza in the trunk.
Best movie ever. Best movie ever. Bill and Ted, Tommy Boy, those are up there. So listen, folks,
There you
thanks so
go.
much for tuning in. Hope you have an amazing, if you're in the U.S., hope you have an amazing holiday weekend. And if you're out of the U.S., I hope you're watching some World Cup because it's an amazing event. So listen, folks, thanks for tuning in.